Welcome to the V2U Research Daily Market Wrap. I'm your host, and today is Thursday, April 9th, 2026. It's been a dynamic session for the Australian markets, characterized by technical resilience amid growing geopolitical headwinds. At V2U Research, our mission is to provide you with the deep dive analysis you need to navigate today's complex financial landscape. We combine raw data with professional insight to help you make informed decisions. On this Thursday, the S&P ASX 200 index closed the session at 8,173.20. This represents a gain of 21.40 points, or 0.24%, showing a market that is cautiously optimistic despite global volatility. Looking at the broader trend, the performance has been impressive. Over the last 5 trading days, the index has gained 4.59%, reflecting a strong recovery and renewed investor confidence. We are now in a very interesting technical position, currently sitting just 2.5% off the 52-week high. This proximity to yearly peaks often invites both profit-taking and fresh momentum buying. However, that optimism has been tempered today. The broader market sentiment is being heavily influenced by a complex and rapidly evolving geopolitical landscape, particularly in the critical trade routes of the Middle East. Initial plans to reopen the Strait of Hormuz have been hit by news of renewed conflict. Israel has launched attacks on Lebanon, and critical infrastructure on both sides of the strait has reportedly been impacted. Disruptions in the Strait of Hormuz are always a primary concern for global markets due to its role as a vital energy artery. This renewed uncertainty is creating a floor for energy prices while weighing on broader risk sentiment. Let's dive deeper into the technical setup. Despite the external noise, the underlying structure of the ASX 200 remains remarkably robust from a charting perspective. The index continues to hold firmly above the key support zone near 8,383.2. For technical traders, this level serves as a critical line in the sand that maintains the current medium-term uptrend. On the upside, we're watching the resistance around 8,140.3. This was an earlier barrier, and breaking decisively above it would be a very bullish signal for participants looking for a run at new record highs. The 14-day RSI is currently sitting at approximately 62.94. This is a healthy reading. It indicates strong bullish momentum without being in the overbought territory above 70, suggesting there's still room to run. So, we're operating in a current range between that 8,383 support and 8,940 resistance. Within this range, the market is looking for the next major catalyst to dictate the direction of the next leg. That catalyst may have arrived in the form of today's PMI data. Services activity in Australia shrank in March, the first contraction we've seen since early 2024. This is a significant data point for the Reserve Bank. The contraction is being driven by a combination of rising input costs and geopolitical tensions, both of which are pressuring domestic demand. This suggests that the sticky inflation in services may finally be cooling, albeit at a cost. When we look under the hood at sector performance, it was a surprisingly bearish picture. Despite the gain in the headline index, more individual sectors ended the day lower than higher. Energy was the standout leader today, gaining 2.58%. This is a classic rebound after the sector had been under pressure, falling 3.4% over the previous 5 sessions. We also saw a rotation into defensive and value areas. Utilities gained nearly 2%, followed by financials at 1.21%, and consumer staples at 0.85%. However, information technology took a massive hit, correcting 6.46%. This sharp sell-off in tech suggests a significant de-risking by institutional investors in the face of rising global uncertainty. Healthcare and consumer discretionary also struggled, falling 1.2% and 0.9% respectively, as traders worried about the impact of the PMI data on consumer spending power. Moving to individual stocks, Bendigo and Adelaide Bank and ASX Ltd were our star performers today, rising 8.4% and 6.6%. Both benefited from the broader strength in the financial sector. On the flip side, Orora and WiseTech Global saw heavy selling. Orora plunged nearly 18%, while WiseTech fell almost 11%, highlighting the volatility currently present in the market. Looking ahead, all eyes are now on the U.S. Market participants are focusing on the U.S. Initial Jobless Claims data due out later today. This is a key piece of the puzzle for the global economic outlook. This data will provide crucial insights into the health of the U.S. labor market. A surprise here could shift expectations for interest rate cuts, which would have a direct and immediate impact on the ASX and the Aussie dollar. If you found this ASX market wrap valuable, please give us a like and subscribe to the V2U Research channel. Turn on notifications so you never miss our daily insights and educational content designed for serious investors. We want to hear from you. What stocks are on your watch list this week? Drop a comment below and let's discuss the opportunities you're seeing in this volatile market. We read every comment. Thank you for joining us today. As always, trade responsibly, manage your risk carefully, and we'll see you right here for the next V2U Research Market Update. Happy trading.
Disclaimer. The information contained in this publication is general in nature and has been prepared without taking into account your objectives, financial situation, or needs. It is provided by Titan Securities, holder of Australian Financial Services, license number 307040. It is not intended to constitute personal financial advice. Investing and trading involve risk, and past performance is not a reliable indicator of future performance. You should consider your own objectives, financial situation, and needs before acting on any information contained herein. You should also read our financial services guide and, where relevant, the product disclosure statement and target market determination issued by the product provider. These documents are available upon request. Titan Securities accepts no liability for any loss or damage arising from reliance on this information.